Hi everyone, welcome to the ICM weekly webinar. Myself, my colleague Wael welcomes you, and thanks to for everyone to joining today. Quite today we are going to cover the basic topics like online trading, which is like what about online trading? What exactly the online trading will be like Forex trading. So we're going to do some basic information about the Forex trading, and my colleague going to explore the platform MD4 about the features and all the many things have been coming up today. So basically this is like where online trading it is an act of accessing the financial markets via electronic trading platform. So nowadays, like online trading is one of the most wanted, and we can say more precious. I mean, we can say most of the platform which is related to it. So which is the financial markets. Basically, it's one of the highest wall different types where we can trade in stocks, commodities, currencies, bonds, and derivatives. And why it's growing popularly, like it's quite very popular. And if you say about offline trading, before the online trading introduced a decade before, a lot of drawbacks are there, like placing orders, or we can say for going to the placing. So when you come into online trading, traders make the decisions by themselves. That means the online platform are easily available on a user-friendly way, where placing their orders, executing the orders, or we can say complete view about the platform, checking out the prices, market fluctuations, and which is basically it's around the clock when they come into the online trading. So it gives them more access to them to take the decision themselves. They also have more control, which has more flexibility to online access basically. So we know that anyway we're going to cover in coming slides about the platforms, how exactly it works, and how user-friendly it's going to be for each and every traders, individuals, even for any type of corporates, maybe institutionals. So it's become a very wide range of trading and coming to the online trading, which also gives access to the variety of tools, which going to give a lot of information about your own portfolio, where you're going to see about your real-time the balance or real-time financial status of your trading or financial status of your portfolio, where it's going to give you the journal details about what exactly happening and what has happened on the previous history of your complete transactions. So this also gives more benefits on online trading. Which is also like an investment a long term when the market is on a running rate, which is look like a long term type of way. So let's move on to the basics, where we're talking about the main part, like basic of forex trading. Forex trading, in the short, it says forex, but most like it's derived from foreign exchange markets. Normally they say it's FX markets, or we can say forex markets, normally like foreign exchange, which it's been shortened as a forex. So it's you can see that's the most traded in the markets, or daily transaction of the volume exceeding more than 6 trillion. So that's the volume of these markets. And the forex markets are very vast, and it has been increased in the volume, and there are a lot of exchanges which involves the market's volume to be created. So as I said, like daily transaction goes exceeding more than 6 trillion. So just think about how big it is, how vast the market has volume. Unlike other markets, the forex market is also not centralized, and its trading is done over the counter. It's normally we say it's OTC, which is based on a centralized systems where you can see the fluctuation in the markets, and different broker has a different platforms, and basically there are many exchanges are there for related to the forex. Talking about CMX, like a Czech Metal Exchange, or we can say NYMEX, or we can talking about COMEX, or talking about CBOT, NIBOT. Different exchanges are there. Even talking about the London market, London Metal Exchange are there. So different exchanges are there. Platform is interlinked on a different exchanges platform with the terms and like different type of category of product will be defined. So especially if talking about the FX, it's traded 24 hours a day. That means like it's round the clock and 5 days a week. So obviously the market starts Monday morning on a server time early, and it's closed on the Saturday morning closing. Like you can say the server time if this Friday is closed in the midnight of this. So it's basically a 5 days of trading, which is round the clock. It may be have a maintenance for half an hour or 45 minutes, depending on the day closing or the settlement date of the closings. So basically, it's like a huge market where players among them are like banks or financial institutions, speculators or hedge funders. More are there, like more. They are like huge volume players are there in the markets. Since the 24 hours markets, definitely the volume has been enormous. Like it keep moving on markets, like depends on different factors. The markets keeps ups and downs. So you can participate or you can be easily control access to the markets anytime as you wish. So it take position in the market based on a certain analysis, which could suggest the value of certain currency will rise or fall. That means since there is a currencies like there are a pair of currencies which is going to be denominations in this trading. Basically, for example, take for euro, which is against dollar, or talking about the sterling, which is against dollar, US dollar. So obviously there will be rise and falls will be there. So that is a major opportunity you take in the markets when the rise and falls. As a trader, go for long when the market goes up, when that means it appreciated, when the currency value appreciated. For example, if you take for euro, when the value goes up, that means against dollar, so it's depreciated. So it normally go for a long position. That means you can say it's a bullish trend. So it's going to be bullish. So obviously the traders go for long when the market rises. And same way, when the market is down, which is going to be fall, you go to sell. So it means a short. So in a simple term, we use it in a technical, in a market term, we use long or buy or go short or sell. So that makes sense, to understand very easily. That means we say that in a technical term, like bullish or bearish. That's what exactly. So these are small things about. We're talking about other point of basic of Forex trading. The major trading session is there. That's the most important thing since it works around the clock. Not what exactly the market rounds keep running all the day, all the time. So mainly like three type of season, like Asia, Europe, and North American trading sessions are there. Three of the major sessions, like you're talking about, start from the Wellington in the market in the morning, and goes on to Tokyo markets, Chinese, then comes to Europe markets, London, then coming to the American market like New York Stock Exchange opens and Chicago Mercantile open, and it goes on that. So these are exactly, it's round the clock. And major trading type of system not been available, which is seen more volatility in the market in the basic on the time. So when you're talking about the basics about the Forex trading, it's all like we're going to cover a few things where major players in the markets or like central banks. Central banks are huge players, one of the major type of players they are, because every central bank has their own norms and policy where huge buying currencies and sellings will be happening over there. So that's one of the major players over there. So financial institutions, hedge funds, even they also plays a major roles because all the major financial institutions has their own currencies type of activities are there. So that plays that. And commercials and investment banks, agree. So we're talking about the companies like exporter, importers also involved in this major type of Forex trading, because mainly they do exports, imports of their basic raw materials. So they use FX markets for hedging the exposure to other foreign markets. And especially like coming to the retail clients, they are also huge players here, huge volume of players, especially high net worth individuals and type of newcomers, new beginners, anyone we can say. So these are major players in the markets. So next, move on to the next. We can say basics again. There are major currencies pairs where we can say the two type of, we normally say like major currencies or minor currencies. When you're talking about the major currencies like Euro USD, or USD Swiss franc or GBP pound or USD CAD, USD JPY, New Zealand USD and Aussie USD. So those are major currencies. So why we say major currencies? That's it's almost like it's against denomination of dollar. So dollar plays a major role which against currencies. So we can say, for example, Like if you say for minor currencies, which is within the pair, like for cross pair, for example, Euro West Pound or British Pound, or talking about New Zealand versus JPY, or you can say British Pound with Japanese yen, or Aussie with Euro. So these are the cross pairs that normally we say. So these are the difference between the major currencies and the minor currencies. So when you're talking about the slides here, you can see there is two values are mentioned here. So this is called bid and ask. This is the most important thing as a beginner. Like we like to know what is the meaning for bid and what is ask. So you can see two prices will be displayed when you're going for trading in the market watch. So it's quoted in a true value. So which is like the difference of this between these two bid and ask, which normally called spread. So that what we say, like it's, for example, bid is nothing but your selling price, and ask is nothing but your buying price. That means ask is buying price, that means exchange is selling price. When you're going for a bid, which is your selling price, that is the exchange buying price. This is the difference. So for here, the very important point is that how to identify, how to understand the value here. For example, we given here is 1.1691. Which is change. It's a 4 decimal, which is like 1.1691, which moves to 1692 or 93, or comes down to 90. It normally says it's called PIP, percentage point. So that is what exactly we are mentioning here. So which is clearly shows that what type of points moves. So we normally call as a PIP. So let's move on next. So basics of Forex trading, which again we are have to look into the long and short. We have been discussing about this before, like it's a bull market and bearish markets. Normally it's long in sense it's a bullish market, and short we call as a bearish market. Either you can say buy when you go for appreciation, market appreciate, which is a bull side. When you say sell, which get on a bearish side, which is a falling markets. So when coming to the term like spread, a spread is nothing but the difference between the bid price and ask price. That's what I was saying to you in the earlier slides. Bid stands for the trader's selling price, and ask stands for the buying price. So whenever you want to buy anything on your currencies or commodities or any stocks, you have to look into the ask side. When you want to sell anything, like you want to sell any product, so you have to look into the bid side. So this is a difference. That's why I told the difference between this. It's normally called as spread. Let's discuss the most important thing, leverage. Most beginners might have not understand how exactly leverage has been defined, and what is the meaning for the leverage. Mostly in coming to the Forex trading, or talking about the commodities trading, or talking about the financial trading. So leverage plays a major roles here, and that's also like very important for each and everyone to participate. Like basically when you are in offline trading, this type of flexibility or this type of or advantage was not there. But when coming to the online trading, there are more advantages, and especially the leverage plays a major role, because leverage allows you to open large deals with relevantly a small investment. That means keeping a small margin, with keeping a small type of margin, you can be able to buy a huge number of quantity of your product. That means the value of the product. So for example, I give a small examples here, which shows a very easy and simple examples. That means margin calculations. Normally we say the leverage is nothing but like we start with 1:50, 1:100, 1:200 or something, we go further. So leverage plays a major role. So when coming to as 1:200, I'm going to show some examples here, keeping as a margin calculation. For example, here the Euro USD, which is being taken as trading at 1.140 and 1.1741. It's our side, bid and ask side. If you say, for example, you want to buy or you want to sell euro at a particular price, I would like to know what is the margin. What is the margin for that? What is the percentage margin I have to pay for to buy one lot? Very simple calculation. Since you have been trading with a leverage of 1:200, simple calculations are there, the formulas are there, which is like current market price into contract size, which equal to total value, which is divided by 200. For example, if I want to take a price of trading at 1.140, I want to know what is the margin I'm going to pay for this particular lot with the one standard lot. For example, you know that one standard lot, which is 100,000 euro, that's a contract size. So if you know this information, you can always available on your MT4 platform, where one of my colleagues going to give you the explanation about the explorer, about the MetaTrader platform. So you're going to show where exactly the specification available. So you can find that under 1,000 euro, which is specifically mentioned over there. Since it's a one standard lot, we're going to take it. So that means like the price, the current market price into multiple into like 100,000, which gives you like 117,400, which is divided by 200. If it gives this range, $587 per standard lots. So this is how the margin has been calculated. For example, if you're going for a lower size contract, the lot size, it has to be divided by accordingly. For example, this is a 1.00 lot size. If you're going for lesser than like 0.10, it's going to be 58.7. And it's going to be more lower than it's going to be 5.87. So this is how exactly the margin is going to be calculated. Well and good. And my colleague going to join, Mr. Wael, so you can enjoy with his discussion on the MetaTrader Explorer platforms. Thank you.
Hello everyone, and thank you for joining today. This is the first episode or webinar of the list of webinars that we're going to be going on with the next weeks. We're deciding to cover all the topics from the start, from the basics of Forex trading until to reaching the top or the major or some also advanced techniques or advanced analysis that a trader can do. So by following this course, by registering for all the webinars for the path to professional trading, you'll be also having all the information that you need as a beginner, and then to start also thinking or looking at the markets as professionals. So what I'm gonna talk about today is just we're gonna go over the platform that's mostly used or commonly used by traders, which is the MetaTrader 4 platform. It is one of the most known and reputable trading platforms made by MetaCodes. It definitely grants access or gives access to traders to execute their trades. So by this, it also gives the trader a couple of or variety of orders. They could be market orders, which are instant execution orders, or pending orders to execute the trade. So a trader would have couple of options or alternatives to decide on a trade, and not only just go by the price that's just available on the market. And this is going to be explained easier on the platform. A trader also would be able to use charts as chart analysis or technical analysis. It's one of the key schools for analyzing financial markets and deciding on your trades, especially as the study of history of a certain price action could also give you more knowledge on what could happen in the market. The platform has a variety of technical indicators, and also you can also add to it, find the technical indicators that you can buy also from different websites or from marketplace, and it also supports auto trading, which is the ongoing hot topic between especially new traders. And the trader will definitely always can appraise or check his performance by issuing detailed statements. So this detailed statement will be covering everything that a trader has done on the platform and be giving him some good ratios or statistics in order to evaluate his performance. So now I'm going to go to the platform, and then we'll keep the questions to the end. So this is the MetaTrader 4 platform. It's very straightforward. You can download it from if you just register for a demo account on ICM's website, or you just go for a platform to the ICM website, you can download the platform easily within the link, and you just follow the process if it is any platform. So the visual, usually when you first download the platform, you're gonna have something similar to this formation here. You have four price patterns. You can change this, but definitely it starts with black, and also you'll have so I'm just going to remove all these so it can be similar to what you open. So when you want to first open, there will be the login and the login and the password. So you just click on login to trade. So you just go for login, the password, and you also choose your server. Definitely, if you're using a demo account, it will be ICM Capital VC Demo. And if you are registering or you already registered for a live account, which we do not advise registering for a live account before practicing the demo and getting more familiar with the platform, you can also choose another server, which is server ICM Capital VC demo. You can also register for a demo account by clicking on open account, and here you can also choose definitely the server that you want and go forward with creating a demo account or creating an existing trade account. So also here you can add all your information and then you will have a demo account. So already I opened one of the demo accounts here. You can see that the platform will give you, first you have the market watch with the server time. It also shows the products that are available along with bid and ask that my colleague just talked about. The bid is the price that you sell where the market buys, and the ask is the price where you buy and the market sells. So this is very straightforward. Also, you can add some more price information here. You just click on right-click on euro dollar. You go here for you add spread, which is the difference between the buy and sell. The buy and sell price. The spread here, for example, is 1.2 pips, for example. And then you go for high and low. It gives you the highest price and the lowest price reached within the past the day throughout the day. You can also go for time, and it gives you the last updated time for the price, and you can see it's matching almost the server, so this price is live. So this is for the market watch. It's very straightforward. You can add also symbols by either just going down to the bottom and just double click on. So here you can double click at the bottom here, and you can add, for example, GBP, AUD, and then it is added, or you just go for a simple right click, also symbols or Control U, and you can add here all the products that ICM provide. For example, if you're a Bitcoin trader, you can either double click on the symbol, or you just go, for example, EuroCAD, and you go for show, and then you'll have it here in front of you, available and ready to trade. Also, there are some good things that you have to watch out for, the specifications of each contract or the trade. So for example, for the euro dollar, you just click right click and go for specifications, and you can see all the details about the product. It is a 5-digit pricing, it is a floating price spread and not fixed spread. Go for stop levels. If you can place the stops from 0. Contract size, the standard contract size is 100,000. The major currency is euro, or the first currency is euro. And also here you have the profit, the margin calculations, and the market. You have full access for the market. Pending orders, they are good until you cancel them. And also here, this is the maximum and minimum volume that you can execute. You can execute starting with 0.01 standard lot, which stands for $1,000, and you go for a maximum volume of 500. And this is the swap that you have to pay if you don't have a swap-free account. And these are the times that where the trading is open or available. So this is for the symbols. If you want to execute a trade, it's very easy, straightforward. You just double click on the euro dollar, for example, and then you choose, since you just confirmed that you chose euro dollar, you can see here the contract size. So by pressing 1, you are buying or selling 100,000 euros against the United States dollar. This is the stop loss, where you can just set a certain price to limit your losses, and the take profit, where you can also set a certain price in order to close the trade when it's reached, so you can enjoy your profits. This is the type of execution. You can go for market execution, so you're just choosing the current market price, the price that's available currently in the market, or you can go for the pending order. So for example, if you're just, I'm going to go for gold, which is the easiest example. So for example, for gold, I'm choosing volume 1, which is 100 ounces. The current price is at 1883. So for example, I say I don't want to buy at 1883, I want to buy at 1850. I'm going to wait for 1850 to buy. So I just go for pending order. I go for buy limit. There are different types of limits. So I'm going to explain them easily now. I go for a buy limit. I just set the price 1850, for example, and place. When I do this, the market will execute my trade if the price goes towards the 1850. So I'm going to explain here on the chart. I'm going to use this chart in order to explain how pending orders work. So for example, this is gold. It's trading currently at 1883. So what I believe is that if the market goes back up towards this level, I'm gonna sell. So I want to place an order. This is my scenario. So the market's gonna go up. I don't want to sell here at the bottom of the current market price. So I want it to go up until and then take my sell position there. So instead of waiting in front of the platform, you can go for a sell limit pending order, where you can set the order to sell at almost this peak, which is almost 1900. So you can set the price, and when the market goes up to this level, it automatically sell or enter a short position. And also, if you believe like the market's gonna go lower towards, for example, 1870 and then bounce back up, so you can set also a buy limit here at 1870. There's also another type of pending orders where, for example, if you believe that the market's going to break above this price, so it's going to continue higher, so you believe that the market's going to move like this, but you're not sure that the market's going to move towards the upside until it breaks above this level. So you don't want to buy here because you're still not sure that the market's going to go up, but you will be sure when the market crosses above this level. So you can go for a buy stop order. So you place your buy stop, and the market will, the platform will buy you your position when the market reaches this price, and then it goes your way. And the opposite also, the other way around, if you believe that the market is going to continue to the downside, if it breaks only below the prior low level, so you don't want to sell at the current market price. You want to wait for this price to come and play, and then you can place also a sell stop at the market. I'm just going to place different positions, and you will be able to see them easily. So this is gold. So for example, pending order, buy limit. So I'm going to buy if the market drops to 1870. This is my confirmation, and I'm going to sell if the market goes to 1890. These are two different trades, different positions. So here I can see my orders on the market. So if the market goes up to 1890, the platform will take a sell trade here. And if the market goes down to 1870, it will take a buy trade here. There's also a different way to delete these orders. You just double click here and press delete, and you get the confirmation, or you can just click X here, but you first have to ensure one-click trading. I'm gonna talk about it in a while. So let's just stick to delete and then confirmation here. So this is for the buy limits and sell limit. For the sell stops and buy stops, so you're also pending order, buy stop. Let's go for 1900. So this is my confirmation. So if the price goes towards 1900, I'll earn the buy position here, and if the market continues higher, I'll be making profit, and if it reverses, it's the other way around. And also I can go for a sell stop, or pending order, stop at 1865, for example. So if the market drops below 1865, I will take a sell position here at the moment. What triggers a trader to use a buy stop and sell stop order is that a trader won't be sure, for example, here, or doesn't have enough information here that the market is gonna move to the upside or the downside, so they prefer to wait for certain key levels to come and play. So this is for the pending orders. It's very easy to initiate them. You're not forced to have the price that's in the market currently. You can set your pending orders and trade it. So let's execute our first trade. So let's go for the euro dollar. This is one market execution. I want to set a certain stop loss. Let's continue with gold. It's easier. So for example, one volume, the current market price is trading at 1881.20 almost. So I just want to risk $6 per ounce. So I just go for 1875 stop loss. And I want to profit like $8 an ounce, so I go for 8 plus, so I go for 1890. So these are my take profits. And stop loss, when I place buy here in the market, I can see at the terminal below that I got my trade executed. This is the order number, the ticket number. This is the time the trade was executed. The type of the trade is a buy, size is 1 in volume, the symbol is gold. The price that the trade was executed is 1881.96. This is my stop loss at 1875. I can do the calculations in order to calculate how much in dollar terms I'll lose if the stop loss got triggered. The take profit at 1890, which would guarantee that if the market goes my way, I will close my position and enjoy the profits near almost $804 when the market reaches 1890. This is the current market price. It's 1882.54. So if I want to close my position now, I will close it on the current market price. Commissions, we don't have commissions on our standard accounts. Swap, it's the price that you pay for keeping a position overnight if you don't have a swap-free account, and this is the profit or the loss that will be available. So we just collect this trade and we're already in profits of almost $180. This is due to the market volatility. At the bottom here, I can see the balance. This is the number, the money that I deposited or I started with, $100,000. This is the equity. This is my balance plus or minus my loss. So I have a profit of almost $300. You can see it's 100,000 plus the profits. The margin is the money that I deposited aside in order to have the purchasing power that I earned to have 100 ounces of gold, which is the leverage calculation that my colleague Sai talked about. And the free margin is the money that I can afford. I can afford the market with, or I can afford to take more positions with the market. So that is always equity minus the margin. So I have a margin of 99,300 plus. And the margin level it's one of the best things that you have to watch out for, since whenever your margin level is high, it's very high, your account is safe. When your margin level drops, it means that you are taking a lot of exposure in your account, you're over leveraging your account, and this could lead to losses and heavy losses on your account, definitely. So you always have to keep your margin level high. This is the way that you can ensure that you are on the right path. When your free margin drops to zero and your equity will be equal to the margin, your margin level will be at 100%, and there you will recognize that you took your wrong position and you are in deep trouble, since you didn't respect your risk management rules or money management rules. So this is for the trade. If I want to close the trade now, we're almost 500 plus on the trade. So if I want to close it, I just double click here and go for close, not sell by market. I'm gonna go for close by market. So I just click on close, and now this is the confirmation. We bought 100 ounces of gold at 1,881.96. The stop loss was 1875 and the take profit 1890. They didn't get triggered since I didn't wait for them to get triggered. I just closed the trade at the current market price at 1887.57, and this is okay. I just go for account history here. I can see the trade in the account history, so I can see here, this is my trade. We got executed, the time, the place, the type, the size, the symbol, my stop loss, my take profit. So all the details about the trade, and I got closed with a profit of $561. So this is how you can execute a trade on the platform. It's very easy, very user-friendly. You can double click here, or you can just go for a new order here, or you can just go for the platform and just also have your new order here by trading. You can just press also F9, and the window will open for trading. So this is straightforward how you can execute a trade. You can also go for something called the one-click trading. So for options here, you go for trade. You make sure to click one-click trading. You accept for the rules, and you click OK. So you have this price tag at the top. The pricing, the price code. So you can here, it shows the volume that you want to trade more often, and you can just trade and sell a trade at the same time. For example, this is buy, this is I'm opening positions. I can sell also. I'm hedging or taking positions on the other side. And if I want to close a trade, I just go for X here, and then I can close them. So this is how you can close your trades on the Trader 4 platform using one click. But always, we don't advise using one click, since sometimes you just click on the mouse by mistake, so you don't want to end up having a position that you didn't wish for. So this is how you can execute the trade on the MetaTrader 4 platform. It's very easy and user-friendly. If you want to use the chart, you just go for right-click on the symbol. You just click on chart window and it opens, or you just drag the symbol that you want to analyze to the chart itself, and then you have it. Here at the top, you have the chart options. So this is the cursor or the cross. Here you can draw for some levels, vertical and horizontal lines. You can also draw some trend lines. We're going to be covering trend lines in the future lessons. So for example, how the market is moving. Also, this is a type of channels that you can draw with the market. So it's an equidistant channel. It's also a type of tools, technical tools to be used. Fibonacci retracement, the Fibonacci tools also. We're going to cover the Fibonacci tools, all Fibonacci tools. And this is the time frame. You can go for 1 minute, 5 minutes, 15 minutes. You can choose the time frame that you don't want to use for analysis. So this is the time frame, and also we'll be covering this in the next webinar, where we'll be talking about technical analysis from scratch. Then we have different chart types. Also, you can choose between chart types, zoom in and zoom out. So these are all the items related to or the tools related to the chart. Also, we have the navigator here where you can see your account. So you can go for a plus, you can see the server and the account. Under indicators, you have technical indicators that you can use. For example, accelerator, you just drag it on the chart. You can see the window, the indicator on the below window. You can go also use automated trading softwares. If you go for auto trading, you can have your automated trading system and just use it on this platform. It's very easy and straightforward. So this is what you need to know mainly about the platform. We told you how to take a trade on the market, how to set pending orders in the market, and how to read it from the terminal. In the coming sessions, we'll talk about how to use the chart, how to analyze the chart. So we're going to be talking about different chart components. This is it. You can also go for, if you just want to check your performance, you can go for account history at any time. You can just save your report, or just save detailed report. So by doing this, you'll have your detailed statement in front of you. So your deposits, all your trades, and how your balance curve looks like. So this is going to be much easier for you to assess your trading performance. Also, here you have some certain statistics that they can help you in assessing your trading. You have the percentage of profit trades, losing trades, your profit factor, your drawdown. So this is all supportive for you to assess your trading performance. So that's all you need to know about the platform currently at the current stage. For later stages, if you go for auto trading, there's also the strategy tester or the back tester here, where you can test your automated trading systems using the MetaTrader 4 platform. So this is it for today. If you just have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, or opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. I believe this is it for today. So thank you all for joining, and stay tuned for the coming topics if you want to learn more about. There are some questions. Okay, so Saif, you can answer this question.
There's a question like, do ICM charge commissions per trade or just spread? We have multiple type of products here. So based on that, it's been the commission will be charged. If you have gone through our website, like on our website, it's clearly mentioned about the various type of product which we offer, which is ICM Direct and ICM Zero. Talking about ICM Zero, which is like a low spread product, which comes with the commissions as per the standard law which surround the transactions. When you're coming to the ICM Direct, which we also offer, since if you're a software account, still we offer a zero commission account. So we can always have a look on it, and you can get more information from your sales representatives. They can guide you more information on this.